Glenn Hutchins did not stumble into billions. His journey from a diligent worker to a titan of private equity is a story about design. It is a story of deliberate choices. It is a story of seeing the world not just for what it is, but for what it could become with the right structure and the right capital. Hutchins represents a particular kind of success, the kind that is not born from a single flash of genius. It is assembled piece by painstaking piece, with intellect, patience, and an uncommon understanding of how systems work. He is an architect of opportunity, both for the companies he transforms and for anyone willing to study his blueprint. His name is synonymous with Silver Lake, but his influence extends far beyond that single creation. Success stories like that of Glenn Hutchins often have deep, unseen roots. His were planted in the fertile ground of a first-rate education. The Lawrenceville School, Harvard College, Harvard Law School, and Harvard Business School, a joint program. This was not just about collecting degrees. It was immersion in intense analytical training. He learned to deconstruct complex problems, to argue a point with data, to think in frameworks. Academic rigor became the bedrock of his career. His first real-world test came on Wall Street. He joined the investment world and the theoretical became practical. He stopped analyzing case studies. He began analyzing real companies, real balance sheets, real problems. This was his apprenticeship in the art of the deal. He learned to value a business, to structure a leveraged buyout, and the delicate dance of negotiation. Just as his path in finance seemed set, Hutchins took a detour. He went to Washington, D.C., serving as a special advisor on economic and healthcare policy in the early Clinton administration. This was not a career change. It was a strategic expansion of his toolkit. He traded corporate balance sheets for national budgets and federal regulations. In Washington, the currency was policy and influence. He learned how regulations are born, how legislation can create industries and cripple others. He added a macroeconomic lens to his micro expertise. He saw the dance between public and private sectors. The rules of the game matter as much as the play. He learned to anticipate policy-driven market shifts. His network expanded: bankers, CEOs, policymakers, economists, regulators. Returning to private finance, he brought a powerful web of relationships, an edge in sourcing deals and navigating regulation. He learned to think in systems, economies, national trends. Risk, now understood on a grand scale, would inform every move that followed. In 1999, Glenn Hutchins and partners did something revolutionary. They founded Silver Lake. Private equity then favored old-world industrials, tire factories, food processors. Tech was seen as too volatile, too risky, too hard to underwrite. Hutchins saw a massive, overlooked opportunity. Tech was becoming the infrastructure of the global economy. Silver Lake targeted large, complex, established tech companies, often struggling. Great products with flawed models, bloated costs, or confused strategy. They embedded, brought in operators, financial engineers, strategists. Restructure divisions, cut waste, reinvest in R&D, and pivot to more profitable markets. Industrial strength private equity applied to silicon, software, and semiconductors. Value investing discipline in high-growth tech created a new playbook. Tech managed for profitability and cash flow, just like any business. Massive returns followed. Silver Lake became Tech PE's reigning force. The machine Hutchins helped build extracted value, where others saw risk. To grasp the model, look at the deals. Consider Skype. In 2009, eBay called it non-core. The market saw novelty. Silver Lake saw differently. A global brand with massive users, changing telecom. They bought a majority stake for about $1.9 billion. Step 1. See the value the owner misses. Step 2. Transform. Professionalize. Strengthen leadership. Upgrade infrastructure. Build a real premium model. Turn a beloved free tool into a sustainable enterprise. Step 3. Exit. Now a far more attractive asset. In under 2 years, Microsoft came calling. An $8.5 billion acquisition. The group more than tripled its investment. A home run. Not an anomaly. A template. Find undervalued, fix intensively, sell to a strategic buyer. Dell, Broadcom, Alibaba. Each deal proved the process for making billions. Hutchins does not preach high-risk, high-reward dogma. His philosophy is prudence, research, and respect for what can go wrong. Rule 1. Know the business inside and out. Competition, technology, supply chain, culture. Information is the ultimate risk mitigation. Rule 2. Patience. He is a long-term value creator. Turnarounds need multi-year execution and timing. Rule 3. People. Back integrity, resilience, and passion. Back the jockey. Rule 4. Controlled risk. Bold yet calculated, leverage used wisely. Diversify subsectors. Always have a clear thesis and failure map. Protect the downside while maximizing the upside. The final ledger has 2 columns, profit and purpose. Through Silver Lake and beyond, he amassed billions via deep analysis, patience, and operational excellence. He serves major institutions and funds economic research, active, strategic philanthropy. Skills that build great businesses also enhance policy and education. Constructive capitalism, build durable companies, foster knowledge, strengthen institutions. The greatest return is not always financial.